The falling of Silicon Valley Bank's news is everywhere. Last time a big bank collapse this size was in 2008 Washington Mutual Bank, which created chaos in the whole world. The whole world faced a serious global recession. People are afraid of the Silicon Valley fail situation now because it will devastate the US economics. And if America's financial system crashes, the whole world will be affected seriously by it. Because the whole world's economy depends on American financial system. So it's creating a greater danger for the world. So how did it happen? And what consequences the world can face by this? Let's find out.
Silicon Valley Bank collapsed on Friday.
The collapse of Silicon Valley Bank is causing shockwaves across the entire business world.
To Silicon Valley Bank.
It is the epicenter of tech startups.
The collapse of Silicon Valley Bank.
The second biggest bank collapse in U.S. history.
Do you know that how Silicon Valley Bank collapsed and why? It is the biggest bank collapse people seen since 2008, and the failure of Silicon Valley Bank is affecting the whole industry of tech and others around the world. Welcome back to our channel, where we talk about the latest news and trends in technology and finance. In today's video, we'll discuss the recent collapse of Silicon Valley Bank, one of the leading financial institutions for startups and tech companies. Here are 5 things you need to know about this event. Regulators shut down Silicon Valley Bank on Friday, marking the biggest bank failure since the 2008 recession and sending shockwaves across the tech world. The Federal Deposit Insurance Corporation, or FDIC, created a national bank of Santa Clara to hold deposits and other assets of the failed Silicon Valley Bank. But the abrupt closing is impacting tech firms that face immediate effects, like ensuring employees get paid. According to a Bloomberg News analysis, more than 93% of the $161 billion deposited at Silicon Valley Bank is not insured by FDIC. So let's dive into the video. 5 things to know about the Silicon Valley Bank collapse. Number 1. Silicon Valley Bank was a major force in tech. Silicon Valley Bank, established 4 decades ago, created to the startup and venture capital funded tech world. Its clients included brands such as Shopify, ZipRecruiter, and venture capital firm, according to the bank's website. Wedbush analyst Dan Ives called it a nightmare situation. This will have a massive ripple impact across the tech ecosystem, and Silicon Valley private company are ready. SVM is a foundational piece of the tech startup community and will have a constrained impact on funding for tech startups going forward. Even businesses that aren't clients are getting impacted by the closure, especially with the most immediate impact on delaying payrolls. Parker Conrad, CEO of Rippling, a payroll processor that used Silicon Valley Bank, said there would be payment delays of pay runs initiated earlier this week. The company is focused on getting these employees paid as quickly as possible. Number 2. The bank is the latest tech victim of high interest rates. Silicon Valley Bank was hit hard by the Federal Reserve's series of rising interest rates. It's the latest way the interest rates have hit the tech sector. Tech companies and the ecosystem they are created in are highly sensitive to increases in interest rates because many companies, particularly startups, operate on high level of debt. Venture capitals and other riskier firms' investments also become less profitable as businesses face higher borrowing costs, and the steep decline in crypto values are also tapped billions from many tech businesses. Number 3. Only a fraction of customer funds may be covered by regulators. Silicon Valley Bank was overseen by the FDIC, a federal agency responsible for making sure banks are sturdy and responsible enough to serve their customers. When an FDIC-regulated bank fails, its customers are insured to up to $250,000 per account with the bank. While some customers may get all of their money refunded by the FDIC, scores of businesses and individuals with millions of dollars in the bank may see little of it returned. Number 4. The collapse is spurring broader concerns for banks. Silicon Valley Bank was the largest bank collapse since the financial crisis in 2008, and its meltdown spurred concerns of a broader decline across the sector. The Dow Jones Industrial Average, S&P 500 Index, and Nasdaq Composites all closed with losses of more than 1% Friday as shares of banks big and small took a nosedive. Number 5. The reasons for SVB's collapse. Despite its strong position in tech industry, SVB faced a series of challenges that led to its collapse in 2022. One of the main factors was the rising competitions from other banks and financial institutions that started offering similar services to tech industries. Moreover, SVB's aggressive lending practices and exposure to risky assets such as cryptocurrencies put a strain on its balance sheet and capital reserves. Finally, the COVID-19 pandemic and the resulting economic downturn put further pressure on SVB's clients and their ability to repay their loans. That's it for today's video. I hope you found this information helpful and insightful. Please share your thoughts and comments below, and don't forget to subscribe to our channel for more videos like this. Thank you for watching, and I will see you in the next one.